Coming up today on Practical Insurance Tips, how to purchase long-term care insurance. Hello and welcome to Practical Insurance Tips. My name is Francyne Walker, and joining me today is Alvin Lynn III from Option Insurance Group. He's here to talk about how to purchase long-term care insurance. Hi, Alvin.
How you doing?
I am great.
Good.
So let's get right to it. What are some of the options to pay for long-term care insurance?
Well, I'm excited to talk to you today.
I'm excited too.
Yeah, and I'll start by saying first that long-term care services are expensive.
Okay.
Now, what I won't do during our meeting today is to give you a lot of statistics or how much it costs, but I will share this with you, that depending on the service, the cost is going to vary. So just knowing that, you can actually do your own research, state by state or wherever you may live. So I'm not going to do that. I'll bore you to death.
Okay.
So I'm not going to do it.
Thank you.
However, yeah, you're welcome. However, I do want you to know, I want you to know that having a plan, first of all, is the most important thing. And whether you believe you need long-term care insurance or not, actually it's just smart.
Okay.
It's just smart. And the good news is there are more options in which can increase your buying choices.
Okay.
Excuse me. The buying options, I like to talk about those, but before I do, the ways to pay for long-term care is personal. And if you can imagine, a married couple, they definitely need to know that it's personal to them. So when choosing a plan, it's personal to you, whether you're married, whether you're single, if you have children, what happens if you are divorced and have children. All those variables should be in play as you consider the type of plan that you may purchase.
Okay.
All right? So at that point, we're here obviously to help you. I laugh to myself, so I'm going to share with you.
Please.
Buying insurance, it's not like reading a good book.
Yeah.
It's not even like watching your favorite video. It's just flat out boring.
Right.
And it is what it is. But you all have to understand as well that the importance of having a good plan.
Yeah.
That's partially true because there are some plans, and I may address those, but to answer your question, the answer is yes. Well, I'd be more happy to. I'd like to start out by saying, actually there are actually 5 ways that you can actually purchase, or there are 5 ways to attain long-term care.
Okay.
One, actually, I'm a veteran. The VA is one way, not to get excited, right? Because they're going to check your income. They want to know how much money. It's a means test.
Okay.
So it's not a free ride.
Okay. So it is income based.
Oh yeah, it's definitely income based. And Medicaid. Medicaid is the nation's largest long-term care provider. That too is income-based. So knowing that, and I will say this, is called spin down. Now, just a quick overview of what a spin down is. How a spin down works is you make so much, and if Medicaid is going to help you out, you're going to have to spend down to X amount before Medicare or Medicaid actually steps in to help you out.
What does that mean, spend down?
Well, that's exactly it. You have to spend down to a certain amount. I'm glad you asked that question again. You have to spend down, and Medicaid, it's at a poverty level determined by the states.
Right.
So we're not going to talk about any particular state, but just imagine this. You have to spend down to a certain amount of money before Medicaid steps in and helps you out.
Okay.
That's how that works. And so those are two.
Yeah.
And then we start, you can also self-fund. Well, what does that mean?
Using your own money?
Using your own money. That's right. However,
nobody wants to do that.
Well, we do have some very wealthy people.
Yeah.
And I mean wealthy, because this is the type of care that costs.
Okay.
All right. Remember, I mentioned that it's expensive. Well,
yeah,
it is expensive, but there are cases in which the very wealthy will use those assets, which produces income on a monthly basis, to they call it different things. The never use money, or the rainy day money. This would be a thunderstorm plus a tsunami.
Right.
Okay. However, that's what they do.
Okay.
Or that's what they tend to do in some cases. But what I want to say to you is this. Assets produce income. Income is for your lifestyle. And you may be able to do that. I don't, with the people that I talk to, I typically talk to the middle class. I don't typically run into that. However, self-funding is one of the things, and that's why I mentioned it. I would also say if there are some very wealthy people out there looking at me right now, listening to me, I would say it's a good idea to consider purchasing a long-term care insurance policy, because it works. Back to you. Now, to be more serious here.
Yeah.
Be more serious. When you talk about the other ways, now we talk about long-term care insurance. And the most popular is the traditional long-term care insurance. They're still widely used. And the way it works is you actually choose the amount of coverage. As long as it will last, you choose the duration. You have so much to, in the way of benefits. You do that. Now, there are two other types, and they're called hybrid policies. And I'm not biased one way or the other, but I'm asked a lot, more times than not, what happens if I do not use the plan? What happens? Well, there is an insurance policy, a hybrid policy that's available, where if you do not use the long-term care that's attached to this hybrid policy, that's what they call it, then you get your money back. Well, what I mean is it actually goes towards your death benefit. So it's a life insurance policy, and because of the way it's attached, if you need the long-term care, then it's going to pay long-term care for your lifetime. Or if you don't, so nothing ever happens, then that money will actually be converted to your death benefit.
That seems like a smart option.
Well, it is.
So what's the other one?
Well, the other one's actually an annuity. And the annuity is done a little bit different, and it provides coverage at a multiple for the initial investment. Well, what it turns out to be is it actually grows tax-free. It grows tax-free, and if you wind up using it, that benefit is also tax-free. So that's how that works.
Okay.
Yeah.
So
absolutely.
Are those most of the options? Are there any others?
Well, it's a good thing you asked, because there is another type of care or insurance type of policy. Now, it's not called long-term care. It's actually called short-term care insurance, or some have different names. But what it actually does is it uses the same benefit triggers as long-term care. You know what they are. They are the activities of daily living.
Right.
Right.
Which is ADL, right?
ADLs. Right. We've heard that name.
Yes.
I've said it to you on more than one occasion.
I'm learning.
All right, no problem. Well, that's what it does. And so if you have dementia or Alzheimer's, something going on, with your cognitive, you may have a cognitive disorder. That's a trigger point. You may need help going to the restroom. You may need help getting out of bed. You may need help eating. You may need help bathing. Those are the other ADLs that trigger this type of policy, but on a short-term basis. So what that does for you is two things. One, it actually lasts about 12 months, but you can remain at home or have services at home or in some type of facility. The other thing is that I've found to be helpful with long-term care, you have the elimination period going out 90 days, and that's a good policy to fill in. Well, what does that mean? Because it has a 0-day elimination period, well, it can fill in while you're waiting on those 90 days.
Okay.
Right? Or it can ride out a year, and then you will walk right into your long-term care insurance policy. That makes sense?
It does.
Okay.
So you can combine. So you can actually have short-term and long-term care insurance.
Yeah, you sure can.
So that would almost kind of eliminate that 90-day period.
Yeah.
So it's like a gap. It fills in that gap.
Yeah, that's a good way of saying it.
Yeah.
So
would you say that's one of the advantages to short-term care insurance?
Well, I will say that's one of the advantages, and it's more and more popular as people are being made aware of it.
Okay.
Another thing is the underwriting is not as restrictive.
Yeah, that's what I was thinking.
Yeah, and what that really means is a person that may not qualify for a long-term care insurance policy may be able to walk right in and get a short-term care insurance policy.
So can long-term care insurance be offered as an employee benefit?
It can. It can from the individual level, the entrepreneur or the sole proprietor. There are tax advantages for that person, all the way up to the C and S Corp or S Corporation types of companies. So the short answer is yes. I am not a tax guy, but there are tax codes that support that. So I would love to. I'd love to be able to say, which I am. The answer is yes.
Okay. Well, it seems to be a lot of insurance options out there. How does one choose?
Well, again, with me, everything starts with thought, preparation, and planning. Thought, preparation, and planning. You got to do it. There are so many different options available to the person that is looking. My job as a certified long-term care specialist is to help you walk through the process.
Okay.
I help you do that, and I truly understand that it's just not like reading your favorite book.
Right.
It's a work to be done, and I and my company, we help facilitate that.
So Option Insurance Group and yourself would be able to help a person even at the research part of the process.
Yeah, we help you from beginning to end.
Okay. That's comforting.
Yeah.
Because it's not fun.
No,
and it's a very uncomfortable thing for a lot of people.
It is. The conversation is difficult. I get that.
Very much. For a lot of families.
Yeah.
Yeah. Wow. As always, so informative, Alvin. Really. Any other thoughts you want to add before we close?
Sure. I would like to. I want to emphasize at least a couple of things.
Please.
And I'm going to say it one more time. Plan. Start with the plan.
Yes.
Ask questions. Have no concern or don't be in a rush. So don't rush. At the end of the day, if you already need long-term care, you're probably not going to qualify for a long-term care plan. That's not how it works. It's preparation. So I want to leave you with this. Plan, be considerate of your family, and know that the consequences of making a family member the caretaker can wreck your family. It can. Your finances, where most people retire with a budget.
Right.
Those assets that were built over time were made to create income for most people to live on.
Right.
And that's what I want to leave you with.
Well, thank you.
Very welcome.
That is a worthy information to leave us with. Thank you so much. Well, that concludes this episode of Practical Insurance Tips. My name is Francyne Walker, and remember, if you have any questions for Alvin, you can contact him at 248-519-2325 or log on to his website, Option Insurance Group, or social media, Option Insurance Group. Remember to share this information with someone you love, and don't forget to tune in next time for Practical Insurance Tips.